Understanding what a system is and how it works. Introduction. Before we dive into studying the accounting system, it's important to understand what a system is and how it works. This will give you a solid foundation and make it easier to grasp the concepts of an accounting system. What is a system? Definition of a system. A system is a collection of parts or components that work together to achieve a common goal. Each part of the system plays a specific role and contributes to the overall functioning of the system. Components of a system. 1. Inputs. These are the resources, information, or materials that are put into the system. Inputs are necessary for the system to start functioning. 2. Processes. These are the actions or steps taken to transform the inputs into outputs. Processes are the core activities within the system. 3. Outputs. These are the results or products that come out of the system after the inputs have been processed. 4. Feedback. This is the information that is fed back into the system to ensure it is working correctly and to make any necessary adjustments. Feedback helps improve the system's performance. How does a system work? Step-by-step operation. 1. Inputs. Enter the system. Inputs can be anything from raw materials, data, energy, or information. These are essential resources that the system needs to function. 2. Processing the inputs. Once the inputs are gathered, the system starts processing them. This involves various actions, calculations, or transformations that turn the inputs into useful outputs. The processing part is where most of the work happens. 3. Producing outputs. After processing, the system generates outputs. These outputs are the final products, results, or services that the system aims to produce. The quality and quantity of outputs depend on how well the system processes the inputs. 4. Receiving feedback. To ensure the system is functioning correctly, feedback is collected. Feedback provides information about the performance of the system, highlighting any issues or areas for improvement. This information is crucial for making adjustments and enhancing the system's efficiency. Characteristics of a system. Interconnected components. All parts of a system are interconnected. This means that a change in one part can affect the other parts and the system as a whole. Goal-oriented. A system is always designed to achieve a specific goal or objective. All components work towards this common goal. Boundaries. A system has defined boundaries that separate it from its environment. These boundaries determine what is inside the system and what is outside. Environment interaction. Systems interact with their environment. Inputs come from the environment, and outputs are delivered back to the environment. The system must adapt to changes in its environment to remain effective. Feedback mechanism. Feedback is a critical component that helps the system to self-regulate and improve. Without feedback, the system cannot adjust to changes or correct any deviations from its goals. Types of systems. Open systems. These systems interact with their environment and are influenced by external factors. They receive inputs from the environment and send outputs back. Most real-world systems are open systems. Closed systems. These systems do not interact with their environment. They are self-contained and operate independently of external influences. Closed systems are rare and typically exist only in controlled environments. Subsystems. Larger systems are often made up of smaller subsystems. Each subsystem has its own specific function, but contributes to the overall goal of the main system. Understanding subsystems helps in managing complex systems more effectively. Importance of understanding systems. Efficiency. Understanding how systems work can help improve efficiency. By knowing the inputs, processes, and outputs, you can identify areas for improvement and optimize the system. Problem solving. When problems arise, understanding the system helps you pinpoint where things are going wrong. You can then focus on the specific part of the system that needs adjustment. Innovation. Knowledge of systems can drive innovation. By understanding the components and how they interact, you can develop new ways to enhance the system or create entirely new systems. Adaptability. Systems must adapt to changes in their environment to remain effective. Understanding the feedback mechanism and how the system interacts with its environment is crucial for making necessary adjustments. Conclusion. By understanding what a system is and how it works, you'll be better prepared to study accounting systems. You'll see how different components of the accounting system interact, how they process financial data, and how the outputs help businesses make informed decisions. This foundational knowledge is key to grasping more complex concepts in accounting systems. An accounting system is a structured process used by organizations to record, categorize, analyze, and report their financial transactions. Its main objective is to provide accurate, timely, and relevant financial information that supports decision-making, compliance, and efficient management of resources. Here's a detailed breakdown of an accounting system and its objectives, along with examples. Components of an accounting system. 1. Source documents. Invoices, bills sent to customers for goods sold or services rendered. Receipts, proof of payment received from customers. Purchase orders, documents authorizing the purchase of goods or services. Bank statements, monthly summaries of bank transactions. 2. Journals, sales journal, records all sales transactions. Purchases journal, records all purchases made by the company. Cash receipts journal, logs all cash inflows. Cash payments journal, logs all cash outflows. 3 ledgers. General ledger, the master set of accounts summarizing all financial transactions. Subsidiary ledgers, detailed accounts supporting the general ledger, such as accounts receivable and accounts payable ledgers. 4. Trial balance, a statement that lists all the balances of the general ledger accounts to ensure that debits equal credits. 5. Financial statements. Income statement shows the company's revenues and expenses over a specific period, resulting in net profit or loss. Balance sheet provides a snapshot of the company's assets, liabilities, and equity at a specific point in time. Cash flow statement highlights the cash inflows and outflows from operating, investing, and financing activities. Objectives of an accounting system. 1. Accurate record keeping. Ensure all financial transactions are recorded accurately and systematically. Example, using double-entry bookkeeping to record both the debit and credit aspects of a transaction ensures accuracy and helps detect errors. 2. Financial reporting. Generate financial statements that reflect the company's financial performance and position. Example, quarterly financial statements help management and stakeholders assess the company's profitability and financial health. 3. Compliance and legal requirements. Adhere to accounting standards and regulatory requirements. Example, companies must comply with IFRS or GAAP standards, and an accounting system helps ensure that financial reporting meets these guidelines. 4. Decision-making support. Provide relevant financial information to support strategic and operational decisions. Example, a manager uses cost analysis reports to decide whether to continue or discontinue a product line. 5. Internal control and fraud prevention. Establish controls to safeguard assets and prevent fraud. Example, implementing separation of duties where the person who authorizes a transaction is different from the one who records it. 6. Budgeting and forecasting. Assist in preparing budgets and financial forecasts to plan for future activities. Example, a company uses past financial data and trends from the accounting system to create next year's budget. Examples of accounting systems. 1. Manual accounting system. Traditional method using physical ledgers and journals. Example, small businesses using handwritten ledgers to track income and expenses. 2. Computerized accounting system. Use of accounting software to record and process financial transactions. Example, QuickBooks or Sage, which automate data entry and report generation. 3. Enterprise resource planning, ERP systems. Integrated systems that manage all aspects of a business, including accounting, inventory, and human resources. Example, SAP or Oracle ERP, which provide comprehensive modules for financial management. Example scenario. Imagine a small retail business, Elegant Dresses, which sells clothing both in-store and online. 1. Source documents. Elegant Dresses receives supplier invoices for new stock and issues sales receipts to customers. 2. Journals. The bookkeeper records all sales in the sales journal and all inventory purchases in the purchases journal. 3. Ledgers. The transactions are posted from the journals to the general ledger, which summarizes all financial activities. 4. Trial balance. At the end of the month, the bookkeeper prepares a trial balance to ensure that total debits equal total credits. 5. Financial statements. Quarterly, the accountant prepares the income statement, balance sheet, and cash flow statement to review the business's financial health. 6. Decision-making. The owner reviews the financial statements and decides to increase marketing efforts for best-selling items based on the sales data. 7. Internal controls. To prevent fraud, the cash register system requires a manager's approval for all refunds. By maintaining an accurate and comprehensive accounting system, Elegant Dresses can effectively manage its finances, comply with legal requirements, and make informed business decisions. An accounting system is crucial for every business, regardless of its size or industry. Here are the key reasons why an accounting system is important and why every business must have one. Importance of an accounting system. 1. Accurate financial records. An accounting system ensures that all financial transactions are recorded accurately and systematically. This is essential for maintaining the integrity of financial data and avoiding errors. 2. Financial reporting. An accounting system allows businesses to generate financial statements, such as the income statement, balance sheet, and cash flow statement. These reports provide a clear picture of the company's financial performance and position. 3. Legal and regulatory compliance. Businesses must comply with various accounting standards and regulatory requirements. An accounting system helps ensure that financial reporting meets these standards, reducing the risk of legal penalties. 4. Decision-making support. Accurate and timely financial information is crucial for making informed business decisions. An accounting system provides the necessary data to support strategic planning, budgeting, and forecasting. 5. Internal control and fraud prevention. An accounting system establishes controls to safeguard assets and prevent fraud. By implementing checks and balances, it reduces the risk of financial mismanagement and ensures the accuracy of financial data. 6. Tax preparation. An accounting system simplifies the process of preparing and filing tax returns. It ensures that all financial transactions are properly documented and categorized, making it easier to calculate tax liabilities. 7. Efficient financial management. An accounting system streamlines financial processes such as invoicing, payments, and payroll. This improves operational efficiency and allows businesses to manage their resources more effectively. 8. Tracking financial performance. By maintaining accurate financial records, businesses can track their performance over time. This helps identify trends, measure progress, and set future goals. 9. Enhancing credibility. Reliable financial reporting enhances the credibility of a business. Stakeholders, such as investors, creditors, and customers, are more likely to trust a company that maintains transparent and accurate financial records. 10. Supporting business growth. As businesses grow, their financial transactions become more complex. An accounting system scales with the business, providing the necessary tools to manage increased financial activities and support expansion. Why every business must have an accounting system. 1. Foundation for success. An accounting system lays the foundation for a successful business. It provides the necessary infrastructure to manage finances effectively and supports overall business operations. 2. Legal obligation. Many jurisdictions require businesses to maintain accurate financial records and comply with accounting standards. An accounting system helps fulfill these legal obligations. 3, improved financial management. With an accounting system in place, businesses can better manage their cash flow, monitor expenses, and optimize their financial performance. This leads to better financial health and sustainability. 4, facilitates growth and expansion. As businesses expand, their financial needs become more complex. An accounting system provides the tools and processes to handle increased financial activities, making it easier to scale operations. 5, competitive advantage. Businesses that use an accounting system can gain a competitive edge by making informed decisions, managing resources efficiently, and maintaining financial stability. This positions them better in the market. 6, building trust. Transparent and accurate financial reporting builds trust with stakeholders. Investors, lenders, and customers are more likely to engage with and support businesses that demonstrate financial integrity. In summary, an accounting system is essential for the accurate recording, reporting, and management of financial information. It supports compliance, decision-making, internal control, tax preparation, and overall financial management. Every business, regardless of size, needs an accounting system to ensure financial accuracy, legal compliance, and sustainable growth. There are several types of accounting systems that businesses can use to manage their financial transactions and reporting. Each type has its own features and is suited to different business needs. Here are the main types of accounting systems. 1. Manual accounting system. Description. A manual accounting system involves recording financial transactions by hand in physical books or ledgers. It relies on paper-based documents and physical journals to track financial activities. Features. Uses paper journals and ledgers. Transactions are recorded manually. Requires significant time and effort to maintain. Prone to human errors. 2. Computerized accounting system. Description. A computerized accounting system uses accounting software to record, process, and store financial transactions electronically. It automates many accounting tasks, reducing the likelihood of errors and increasing efficiency. Features. Utilizes software to automate accounting processes. Provides real-time financial data and reporting. Reduces manual data entry and human error. Can generate various financial reports quickly. Improves accuracy and efficiency. 3. Single entry accounting system. Description. A single entry accounting system records each financial transaction as a single entry in the accounting records. It is a simple system often used by small businesses with straightforward financial transactions. Features. Records each transaction only once. Similar to maintaining a checkbook register. Simpler to manage but less comprehensive. Does not track assets and liabilities comprehensively. 4. Double entry accounting system. Description. A double entry accounting system records each transaction as both a debit and a credit in two separate accounts. This system provides a more complete and accurate picture of a company's financial position. Features. Each transaction affects at least two accounts. Ensures that the accounting equation, assets equals liabilities, equity, always balances. Reduces errors and provides a more accurate financial picture. Standard method for most businesses. 5. Cash basis accounting system. Description. A cash basis accounting system records financial transactions only when cash is received or paid. It is a straightforward method often used by small businesses and individuals. Features. Records income when cash is received. Records expenses when cash is paid out. Simple and easy to implement. Does not account for receivables or payables. 6. Accrual basis accounting system. Description. An accrual basis accounting system records financial transactions when they are earned or incurred, regardless of when cash is exchanged. This method provides a more accurate picture of financial performance and position. Features. Records revenue when earned, not when received. Records expenses when incurred, not when paid. Provides a more accurate representation of financial health. Complies with generally accepted accounting principles, GAPE, and International Financial Reporting Standards, IFRS. 7. ERP, Enterprise Resource Planning Systems. Description. ERP systems integrate various business processes, including accounting, into a single comprehensive system. These systems are used by larger organizations to manage complex operations and provide real-time financial data. Features. Integrates accounting with other business functions like inventory, sales, and HR. Provides real-time data across the organization. Enhances decision-making and operational efficiency. Scalable to support business growth. 8. Cloud-based accounting systems. Description. Cloud-based accounting systems are online platforms that allow businesses to manage their finances over the internet. These systems offer flexibility, scalability, and access to financial data from anywhere with an internet connection. Features. Accessible from any device with an internet connection. Provides automatic updates and backups. Enhances collaboration among team members. Scalable and cost-effective for businesses of all sizes. In summary, businesses can choose from a variety of accounting systems based on their size, complexity, and specific needs. Manual and single-entry systems are suitable for very small or simple operations, while computerized, double-entry, accrual basis, ERP, and cloud-based systems are better suited for larger and more complex businesses. What is a computerized accounting system? A computerized accounting system is an accounting system that uses computer software to manage and record financial transactions. Unlike manual accounting systems, which rely on paper-based methods, computerized systems automate many of the tasks involved in accounting, making the process more efficient and accurate. Components of a computerized accounting system. 1. Hardware. Computers, desktops, laptops, or servers that run the accounting software. Peripherals, printers, scanners, and other devices used to input and output data. 2. Software. Accounting software, programs designed to handle financial data, perform calculations, and generate reports. Examples include QuickBooks, Sage, and Xero. 3. Database, data storage, a centralized database that stores all financial transactions and records. This ensures data is organized and easily accessible. 4. User interface. Forms and fields for entering data, such as invoices, receipts, and payments. Menus and navigation. Tools that help users access different functions of the software, like generating reports or viewing account balances. 5. Security measures. Access controls, user permissions and roles to ensure that only authorized personnel can access sensitive financial information. Data encryption, protecting data from unauthorized access during transmission and storage. Key features of a computerized accounting system. 1. Automation, data entry. Automatic recording of transactions reduces the need for manual entry. Calculations, automated calculations for taxes, discounts, interest, and other financial figures. Reconciliation, automatic bank reconciliation helps match the company's records with bank statements. 2. Real-time processing. Transactions are processed and recorded in real time, providing up-to-date financial information. 3. Reporting. Financial statements. Automatic generation of income statements, balance sheets, and cash flow statements. Custom reports. Ability to create custom reports tailored to specific business needs. 4. Data management. Storage and retrieval. Efficient storage and quick retrieval of large volumes of data. Backup and recovery. Regular data backups to prevent loss of information and ensure data recovery in case of system failure. 5. Scalability. Ability to handle increased data volumes and support business growth without significant changes to the system. Integration. Integration with other business systems such as inventory management, payroll, and customer relationship management (CRM). 7. User-friendly interface. Intuitive and easy-to-use interface that simplifies navigation and operation for users, even those with limited accounting knowledge. Advantages of a computerized accounting system. 1. Accuracy. Reduces human errors in calculations and data entry, ensuring more accurate financial records. 2. Efficiency. Speeds up the accounting process by automating repetitive tasks, allowing accountants to focus on analysis and decision-making. 3. Consistency. ensures consistent application of accounting principles and standards across all transactions. 4. Accessibility provides easy access to financial data and reports from anywhere, especially with cloud-based systems. 5. Cost-effective reduces the need for extensive manual labor, lowering overall operational costs. Most commonly used accounting software. 1. QuickBooks. Overview. Developed by Intuit, QuickBooks is one of the most popular accounting software programs for small to medium-sized businesses. Features: invoicing, payroll, expense tracking, tax calculation, and financial reporting. Advantages: user-friendly interface, comprehensive feature set, and strong support community. Versions: available in desktop and online versions, catering to different business needs. 2. Sage. Overview. Sage offers a range of accounting solutions suitable for small businesses to large enterprises. Features: inventory management, invoicing, payroll, project management, and detailed financial reporting. Advantages: robust and scalable with industry-specific solutions and strong customer support. Versions include Sage 50 Cloud, Sage Intacct, and Sage Business Cloud Accounting. 3. Xero. Overview. Xero is a cloud-based accounting software designed for small to medium-sized businesses. Features: invoicing, bank reconciliation, expense management, payroll, and financial reporting. Advantages: easy to use, integrates well with other business applications, and offers real-time financial data. Versions: available in various plans to suit different business sizes and requirements. 4. FreshBooks. Overview. FreshBooks is a cloud-based accounting software aimed at small businesses and freelancers. Features: invoicing, time tracking, expense management, and financial reporting. Advantages: intuitive interface, strong customer support, and mobile app access. Versions: offers different pricing plans based on the number of clients and features needed. 5. Zoho Books. Overview. Part of the Zoho suite, Zoho Books is a cloud-based accounting solution for small to medium-sized businesses. Features: invoicing, expense tracking, project management, and detailed financial reporting. Advantages: integrates seamlessly with other Zoho applications, affordable pricing, and extensive automation features. Versions: offers multiple plans catering to different business sizes and requirements. 6. Wave. Overview. Wave is a free accounting software solution ideal for small businesses and freelancers. Features: invoicing, receipt scanning, expense tracking, and financial reporting. Advantages: cost-effective, free, user-friendly interface, and strong support for basic accounting needs. Versions: free version with optional paid services like payroll and payment processing. Conclusion: a computerized accounting system is essential for modern businesses as it enhances the accuracy, efficiency, and reliability of financial management. It automates many of the manual tasks involved in accounting, allowing businesses to focus on growth and strategic planning. Popular accounting software such as QuickBooks, Sage, Xero, FreshBooks, Zoho Books, and Wave offer a range of features and benefits tailored to different business needs, making them indispensable tools for managing finances effectively. Choosing the right accounting system for a business is a critical decision that can impact its financial health, efficiency, and growth. Here is a step-by-step guide to help beginners and those with no prior knowledge understand how to choose the right accounting system for their business. Step-by-step guide to choosing the right accounting system. 1. Understand your business needs. Before selecting an accounting system, it's essential to understand the specific needs of your business. Consider the following: size of the business, small, medium, or large. The size will influence the complexity and scalability of the accounting system you need. Type of business. Different industries have different accounting requirements, e.g. retail, manufacturing, services. Number of users. How many people will need access to the system? This includes accountants, managers, and other employees. Budget. How much can your business afford to spend on an accounting system? Consider both initial costs and ongoing expenses. 2. Identify key features required. List the features that are essential for your business operations. Some common features to consider include basic accounting functions, invoicing, expense tracking, bank reconciliation, payroll management, calculating and managing employee salaries and wages, inventory management, tracking stock levels, orders, and deliveries, financial reporting, generating financial statements, tax reports, and custom reports, project management, tracking the financials of individual projects, multi-currency support, handling transactions in different currencies if you operate internationally, integration, ability to integrate with other business software like CRM, ERP, and e-commerce platforms. 3. Consider ease of use. The accounting system should be user-friendly, especially for those without an accounting background. Look for intuitive interface, easy navigation and clear instructions, customer support, availability of support through chat, email, or phone to help when needed, training resources, availability of tutorials, guides, and training sessions to help users get up to speed. 4. Evaluate scalability. Choose an accounting system that can grow with your business. This means it should be able to handle increased transaction. Business grows, the number of transactions will increase. Additional users. More employees might need access to the system in the future. Advanced features. You might need more advanced features as your business operations become more complex. 5. Security is crucial for protecting your financial data. Consider the following security features. Data encryption ensures that your data is encrypted and protected from unauthorized access. User permissions allows you to control who has access to different parts of the system. Regular backups ensures that your data is regularly backed up to prevent loss. 6. Determine deployment options. Accounting systems can be deployed in different ways. Choose the one that suits your business. On-premises, installed on your local computers and servers, offers more control but requires IT resources for maintenance. Cloud-based, hosted online and accessible from anywhere with an internet connection, easier to maintain and often more cost-effective. 7. Check integration capabilities. Ensure the accounting system can integrate with other software you are using or might use in the future. CRM, Customer Relationship Management, for managing customer data and sales. ERP, Enterprise Resource Planning, for managing overall business processes. E-commerce platforms. If you run an online store, integration with your e-commerce platform is essential. Banking systems, for automatic bank reconciliation and transaction imports. 8. Consider cost. Evaluate the total cost of ownership, including initial purchase or subscription cost, the upfront cost of buying or subscribing to the software, maintenance and support fees, ongoing costs for support and updates, training costs, any costs associated with training your staff to use the system, upgrade costs, costs for adding new features or upgrading to a more advanced version. 9. Read reviews and get recommendations. Research and gather feedback from other businesses similar to yours. Online reviews. Check reviews on software comparison websites. Testimonials. Look for customer testimonials on the software's website. Recommendations. Ask for recommendations from business associates, accountants, or industry groups. 10. Request demos and trials. Before making a final decision, request a demo or take advantage of a free trial. Demos. A demo allows you to see the software in action and ask questions. Free trials. A trial period lets you test the software with your own data and see how it fits your business needs. Detailed example of the decision-making process. Imagine you own a small retail store called Trendy Fashions, and you need to choose an accounting system. Here's how you might go through the process. 1. Understand your business needs. Size, small business with potential for growth. Type, retail, dealing with inventory management and sales tracking. Users, you and one part-time accountant. Budget, limited budget but willing to invest in a good system. 2. Identify key features required. Basic accounting functions like invoicing, expense tracking, and bank reconciliation. Inventory management to track stock levels and reorder products. financial reporting to generate income statements and balance sheets, integration with your e-commerce platform to sync online sales data. 3. Consider ease of use. Look for a system with a simple and intuitive interface. Ensure good customer support is available. Check for training resources such as tutorials and guides. 4. Evaluate scalability. Choose a system that can handle more transactions as your business grows. Ensure it allows for adding more users in the future. Look for advanced features that might be needed as the business expands. 5. Assess security features. Ensure the system has data encryption. Check for user permissions to control access to sensitive information. Confirm that the system offers regular data backups. 6. Determine deployment options. Prefer a cloud-based system for ease of access and maintenance. 7. Check integration capabilities. Ensure the system can integrate with your e-commerce platform for seamless data syncing. Check for integration with your banking system for automatic reconciliation. 8. Consider cost. Compare the initial subscription costs of different systems. Check for any additional fees for support and upgrades. Calculate the total cost of ownership over the long term. 9. Read reviews and get recommendations. Read online reviews of different accounting software. Look for testimonials from other retail businesses. Ask for recommendations from other small business owners in your network. 10. Request demos and trials. Request demos from software providers like QuickBooks, Xero, and FreshBooks. Sign up for free trials to test the software with your business data. Conclusion. Choosing the right accounting system for your business involves understanding your specific needs, identifying key features, evaluating ease of use, scalability, security, integration capabilities, and cost. By following a systematic approach and considering all these factors, you can select an accounting system that not only meets your current requirements, but also supports your business's growth and future needs. Taking the time to research, read reviews, get recommendations, and test the software through demos and trials will help ensure you make an informed decision that benefits your business in the long run. How a computerized accounting system works. A computerized accounting system uses computer software to manage and record financial transactions. It automates many of the tasks involved in accounting, making the process more efficient and accurate. Here's a detailed explanation of how a computerized accounting system works, broken down into simple steps and concepts that even a beginner or someone with no accounting background can understand. 1. Input of financial data. The first step in a computerized accounting system is entering financial data. This includes all the money coming into the business, revenue, and all the money going out, expenses. Data entry. Users input data into the system using a computer or mobile device. This can include sales receipts, invoices, bills, and payroll information. Forms and fields. The software provides forms and fields where users can enter specific details about each transaction, such as the date, amount, and description. 2. Processing transactions. Once the data is entered, the software processes the transactions. This means it performs the necessary calculations and records the transactions in the appropriate accounts. Automated calculations. The system automatically calculates totals, taxes, discounts, and other financial figures, reducing the risk of human error. Journal entries. Each transaction is recorded as a journal entry, which includes details like the date, accounts affected, and amounts debited or credited. 3. Storing data. The system stores all the financial data in a centralized database. This ensures that the data is organized, secure, and easily accessible. Database. A database is a digital storage space where all the financial transactions and records are kept. It allows for quick retrieval and easy management of data. Backup and recovery. The system regularly backs up the data to prevent loss and ensures that it can be recovered in case of a system failure. 4. Generating reports. One of the key features of a computerized accounting system is its ability to generate various financial reports. These reports help business owners and managers understand the financial health of the business. Financial statements. The system can automatically generate financial statements such as income statements, balance sheets, and cash flow statements. Custom reports. Users can create custom reports to analyze specific aspects of the business, like sales trends or expense patterns. 5. Bank reconciliation. The system can automatically reconcile the business's records with its bank statements. This ensures that all transactions are accounted for and that there are no discrepancies between the business's records and the bank's records. Automatic reconciliation. The software matches the transactions recorded in the system with those on the bank statement, highlighting any discrepancies for further review. Error detection. This process helps detect errors or fraudulent transactions, ensuring the accuracy of the financial records. 6. Managing payroll. A computerized accounting system can also handle payroll management, ensuring that employees are paid accurately and on time. Payroll processing. The system calculates employee salaries, wages, taxes, and other deductions automatically. Payslips. It generates payslips for employees, detailing their earnings and deductions. 7. Integration with other systems. Many computerized accounting systems can integrate with other business systems such as inventory management, customer relationship management, CRM, and e-commerce platforms. Inventory management. Integration with inventory systems allows for automatic updates of stock levels and order processing. CRM integration. Connecting with CRM systems helps track customer payments and manage accounts receivable. E-commerce integration. For businesses that sell online, integration with e-commerce platforms ensures that sales data is automatically recorded in the accounting system. 8. Security and access control. Security is a crucial aspect of a computerized accounting system. It ensures that sensitive financial data is protected from unauthorized access. User permissions. The system allows the business owner to control who has access to different parts of the software. For example, only certain employees might have permission to view payroll information. Data encryption. The system encrypts data, making it unreadable to anyone without the proper authorization. Conclusion. A computerized accounting system automates and streamlines the process of managing a business's financial transactions. It involves inputting data, processing transactions, storing data in a secure database, generating reports, reconciling bank statements, managing payroll, integrating with other business systems, and ensuring data security. By using a computerized accounting system, businesses can save time, reduce errors, and gain valuable insights into their financial health. This helps them make better decisions and focus on growing their business. What is a cloud-based accounting system? A cloud-based accounting system is an online accounting software that allows users to access their financial data and perform accounting tasks over the internet. Unlike traditional accounting systems that are installed on a local computer or server, cloud-based systems are hosted on remote servers and accessed through a web browser. This setup offers numerous advantages in terms of accessibility, scalability, and security. Here's a detailed explanation of cloud-based accounting systems to help you understand the concept thoroughly. 1. Basic concept. A cloud-based accounting system stores all your financial data in the cloud, which is a term for servers accessible over the internet. This means you don't need to install the software on your local computer or worry about maintaining hardware or software updates. Remote servers. The software and your data are stored on powerful servers maintained by the service provider. Web access. You can access the system from any device with an internet connection, such as a laptop, tablet, or smartphone, using a web browser. 2. Accessibility. One of the main benefits of a cloud-based accounting system is that it allows you to access your financial data anytime, anywhere. Anytime access. You can log into your accounting system 24/7, which is especially useful for businesses that operate in multiple time zones or have remote employees. Multiple devices. Whether you're in the office, at home, or on the go, you can access your accounting system from any device with an internet connection. 3. Real-time updates. Cloud-based accounting systems provide real-time updates, meaning that any changes or transactions you enter are instantly reflected in the system. Real-time data. This ensures that your financial information is always up to date, which is crucial for making informed business decisions. Collaboration. Multiple users can work on the system simultaneously, with all updates being visible to everyone in real time. Security. Security is a major concern for any business, and cloud-based accounting systems are designed with robust security measures to protect your data. Data encryption. Your data is encrypted both during transmission, when it's being sent over the internet, and at rest, when it's stored on the server, making it unreadable to unauthorized users. Access controls. You can set permissions to control who has access to different parts of the system, ensuring that sensitive information is only accessible to authorized personnel. Regular backups. The service provider regularly backs up your data to prevent loss in case of a system failure or cyber attack. 5. Cost efficiency. Using a cloud-based accounting system can be more cost-effective than traditional accounting software. Subscription model. Most cloud-based systems operate on a subscription basis, meaning you pay a monthly or annual fee. This spreads the cost over time and eliminates the need for a large upfront investment. No maintenance costs. Since the service provider handles all the maintenance, updates, and security, you don't need to spend money on IT infrastructure or personnel. 6. Scalability. Cloud-based accounting systems are highly scalable, making them suitable for businesses of all sizes. Flexible plans. You can choose a plan that fits your current needs and easily upgrade as your business grows. Adding features. Many cloud-based systems allow you to add new features or modules as your business requirements change. 7. Integration. Cloud-based accounting systems often integrate seamlessly with other online business tools and applications. Integration with other systems. You can connect your accounting system with your CRM, ERP, e-commerce platform, payroll services, and more. This ensures that data flows smoothly between different parts of your business. APIs. Many cloud-based systems offer APIs, application programming interfaces, that allow you to create custom integrations or connect with third-party applications. 8. Automatic updates. One of the conveniences of cloud-based systems is that they are automatically updated by the service provider. Latest features. You always have access to the latest features and improvements without having to manually download and install updates. Security patches. The provider regularly updates the software with the latest security patches, protecting your data from emerging threats. Example to illustrate how it works. Let's take an example of a small business, Tech Solutions, that decides to use a cloud-based accounting system. 1. Subscription and setup. The owner subscribes to a cloud-based accounting system like QuickBooks Online or Xero. They set up their account by entering basic business information and configuring the settings according to their needs. 2. Data entry. The owner and their accountant can log in from their laptops, tablets, or smartphones to enter sales, expenses, and other financial transactions. All entries are processed in real time, and any updates are immediately visible to both the owner and the accountant. 3. Real-time access. While the owner is traveling, they can still access the system to check on the financial status of the business, review reports, and approve payments. The accountant working from home can simultaneously enter new transactions and generate financial statements. 4. Security and backups. The data entered by both the owner and the accountant is encrypted and securely stored on the provider's servers. The service provider performs regular backups, ensuring that the business's financial data is safe from loss or corruption. 5. Integration. Tech Solutions integrates their accounting system with their online store. Sales data from the store automatically syncs with the accounting system, reducing manual data entry. They also connect their payroll service, so employee salary details are automatically updated in the accounting system. 6. Cost management. Instead of paying a large sum up front for software, Tech Solutions pays a manageable monthly subscription fee. They don't need to worry about maintaining the software or purchasing additional IT resources, as the service provider handles everything. Conclusion. A cloud-based accounting system is an online solution that offers numerous benefits over traditional accounting software. It provides accessibility from any device with an internet connection, real-time updates, robust security, cost efficiency, scalability, seamless integration with other business tools, and automatic updates. For businesses like Tech Solutions, these advantages translate into more efficient operations, better financial management, and the flexibility to grow and adapt to changing needs. By understanding these key aspects, even those with no prior accounting knowledge can appreciate how a cloud-based accounting system can streamline their business processes and contribute to their success. How AI has affected accounting systems. Artificial intelligence, AI, has significantly transformed accounting systems, enhancing their capabilities and revolutionizing the way accounting tasks are performed. AI involves using machines and software to perform tasks that would normally require human intelligence, such as learning, reasoning, problem-solving, and decision-making. In accounting, AI technologies have automated many routine tasks, improved accuracy, and provided deeper insights into financial data. Here's a detailed explanation of how AI has affected accounting systems, broken down into simple steps and concepts to help you understand it thoroughly. 1. Automation of routine tasks. AI has automated many repetitive and time-consuming tasks that accountants used to do manually. This has not only increased efficiency, but also allowed accountants to focus on more strategic activities. Data entry. AI systems can automatically capture and enter data from various sources, such as invoices, receipts, and bank statements, into the accounting system. This reduces the need for manual data entry and minimizes errors. Invoice processing. AI can automatically scan, read, and process invoices. It can match invoices with purchase orders and receipts, ensuring that payments are made accurately and on time. 2. Enhanced accuracy and reduced errors. AI technologies have significantly improved the accuracy of accounting systems by reducing human errors and ensuring data consistency. Error detection. AI can identify and flag inconsistencies or anomalies in financial data. For example, it can detect duplicate entries, unusual transactions, or discrepancies between accounts. Reconciliation. AI automates the reconciliation process by matching transactions in the accounting system with those in bank statements or other financial records, ensuring that all entries are accounted for and accurate. 3. Improved financial analysis and reporting. AI has enhanced the ability of accounting systems to analyze financial data and generate insightful reports. Predictive analytics. AI can analyze historical financial data to predict future trends and outcomes. This helps businesses forecast revenue, expenses, and cash flow more accurately. Real-time reporting. AI enables real-time analysis and reporting, providing up-to-date financial information that helps businesses make timely and informed decisions. 4. Streamlined auditing and compliance. AI has streamlined the auditing process and improved compliance with financial regulations and standards. Automated audits. AI can perform continuous audits by analyzing transactions in real time. It can identify and flag suspicious activities, ensuring compliance with financial regulations. Regulatory compliance. AI systems can monitor changes in financial regulations and update the accounting system accordingly, ensuring that businesses remain compliant with the latest standards. 5. Enhanced decision-making. AI provides deeper insights into financial data, enabling better decision-making. Data visualization. AI can create visual representations of financial data, such as charts and graphs, making it easier to understand and interpret complex information. Scenario analysis. AI can simulate different scenarios based on various assumptions, helping businesses evaluate the potential impact of different decisions and choose the best course of action. 6. Natural language processing, NLP. AI technologies such as natural language processing, NLP, have made it easier for users to interact with accounting systems. Chatbots and virtual assistants. AI-powered chatbots and virtual assistants can answer accounting-related queries, provide information, and perform tasks like generating reports or processing transactions. This improves accessibility and user experience. Document processing. NLP can analyze and interpret unstructured data from documents, such as contracts or emails, extracting relevant financial information and integrating it into the accounting system. 7. Fraud detection and prevention. AI has significantly improved the ability of accounting systems to detect and prevent fraud. AI can analyze large volumes of transactions to identify patterns and detect anomalies that may indicate fraudulent activity. It can flag suspicious transactions for further investigation. Behavioral analysis. AI can monitor user behavior to detect unusual activities such as unauthorized access or attempts to manipulate financial data, helping prevent internal fraud. Example to illustrate how AI works in accounting. Let's consider a small business, Green Tech Solutions, that has implemented an AI-powered accounting system. 1. Automated data entry. The AI system automatically captures data from scanned invoices and receipts, eliminating the need for manual data entry. It reads the details such as the date, amount, and vendor and enters them into the appropriate accounts. 2. Invoice processing and payment. When GreenTech receives an invoice, the AI system scans and processes it, matching it with the corresponding purchase order and receipt. If everything matches, it schedules the payment automatically. 3. Real-time financial reporting. The AI system provides real-time financial reports, allowing the business owner to see up-to-date information on revenue, expenses, and cash flow. The owner can access these reports from any device, anywhere. 4. Predictive analytics for forecasting. The AI system analyzes past sales data and predicts future revenue trends. This helps GreenTech plan its budget and make informed decisions about investments and expenses. 5. Continuous auditing and compliance. The AI system continuously monitors transactions for compliance with financial regulations. It automatically flags any suspicious activities or discrepancies for further review by the auditor. 6. Natural language interaction. The business owner can ask the AI-powered virtual assistant questions like, "What were our total sales last month?" or "Generate a profit and loss report for the last quarter." The assistant quickly provides accurate answers and generates the requested reports. 7. Fraud detection. The AI system analyzes transaction patterns and detects any unusual activities that could indicate fraud. For example, if an employee tries to make an unauthorized payment, the system flags it for further investigation. Conclusion. AI has profoundly impacted accounting systems by automating routine tasks, enhancing accuracy, improving financial analysis and reporting, streamlining auditing and compliance, and enabling better decision-making. AI technologies such as natural language processing, NLP, and predictive analytics have made accounting systems more powerful and user-friendly. By implementing AI-powered accounting systems, businesses like GreenTech Solutions can save time, reduce errors, prevent fraud, and gain valuable insights into their financial data. This comprehensive approach helps businesses operate more efficiently and make informed decisions, ultimately contributing to their success and growth. Risks that AI might bring for an accounting system. While AI brings numerous benefits to accounting systems, it also introduces several risks. These risks need to be carefully managed to ensure that the adoption of AI in accounting systems does not lead to significant issues. Here is a detailed explanation of the potential risks associated with AI in accounting systems, explained in simple terms for easy understanding. 1. Data security and privacy risks. AI systems often require access to large amounts of sensitive financial data, which can pose significant security and privacy risks. Data breaches. AI systems can be a target for cyber attacks. If hackers gain access to the system, they could steal sensitive financial information, such as bank account details, customer data, and financial transactions. Privacy concerns. AI systems often analyze personal and sensitive information. There is a risk that this data could be mishandled or exposed, leading to privacy violations. 2. Bias and discrimination. AI algorithms can sometimes be biased, which can lead to unfair or discriminatory outcomes. Algorithmic bias. AI systems learn from historical data, which may contain biases. If the data used to train the AI contains biases, the AI can perpetuate and even amplify these biases. For example, if an AI system used for credit scoring is trained on biased data, it may unfairly favor certain groups over others. Unintentional discrimination. Bias in AI systems can lead to discriminatory practices. For instance, if an AI system is used to determine loan approvals and it discriminates based on race or gender, it could lead to unfair treatment of certain individuals. 3. Lack of transparency and explainability. AI systems, especially those using complex algorithms like deep learning, can be difficult to understand and interpret. Black box nature. Many AI systems operate as black boxes, meaning their internal workings are not transparent. This lack of transparency can make it difficult for users to understand how decisions are made and to trust the outcomes. Explainability challenges. When AI makes a decision, it is often challenging to explain the rationale behind it. This can be a problem in accounting, where clear and understandable explanations are required for financial decisions and audits. 4. Dependence on quality data. AI systems rely heavily on the quality of the data they are trained on and use for analysis. Garbage in, garbage out. If the data fed into the AI system is inaccurate, incomplete, or biased, the outputs and decisions made by the AI will also be flawed. Ensuring high-quality data is critical, but it can be challenging. Data management issues. Collecting, storing, and managing large volumes of data can be complex and expensive. Poor data management practices can compromise the effectiveness of AI systems. 5. Job displacement and workforce challenges. The automation of accounting tasks by AI can lead to concerns about job displacement and changes in the workforce. Job losses. AI can automate many routine accounting tasks, which may lead to job losses for accountants and other financial professionals who perform these tasks manually. Skill gaps. As AI becomes more integrated into accounting systems, there will be a need for accountants to develop new skills to work effectively with AI technologies. This can create a skill gap if the workforce is not adequately trained. 6. High implementation and maintenance costs. Implementing and maintaining AI systems can be expensive and resource-intensive. Initial investment. Developing or purchasing AI systems can require a significant initial investment. Small businesses in particular may find it challenging to afford these costs. Ongoing maintenance. AI systems require continuous updates, maintenance, and monitoring to ensure they function correctly and remain secure. This ongoing maintenance can be costly and resource-intensive. 7. Ethical and legal concerns. The use of AI in accounting raises various ethical and legal concerns that need to be addressed. Ethical dilemmas. The use of AI in decision-making can raise ethical questions, such as how to ensure fairness and accountability. For example, if an AI system makes a mistake, it can be challenging to determine who is responsible. Regulatory compliance. As AI technologies evolve, there is a need to ensure they comply with existing regulations and standards. Additionally, new regulations may be introduced to govern the use of AI, requiring businesses to stay updated and compliant. Example to illustrate potential risks. Let's consider a hypothetical accounting firm, ABC Accounting, that has implemented an AI-powered accounting system. Here are some potential risks they might face. 1. Data security and privacy. If ABC Accounting's AI system is not adequately secured, it could be vulnerable to cyber attacks. Hackers could potentially access sensitive client data, leading to financial loss and reputational damage. 2. Bias and discrimination. If the AI system used for fraud detection is trained on biased data, it might disproportionately flag transactions from certain demographics as suspicious, leading to discriminatory practices. 3. Lack of transparency. When the AI system makes decisions about creditworthiness, the clients might not understand how these decisions are made. If a client is denied credit, it might be difficult to explain the specific reasons, leading to dissatisfaction and loss of trust. 4. Dependence on quality data. If ABC Accounting's AI system is fed with inaccurate or outdated financial data, the financial reports generated could be incorrect, leading to poor business decisions. 5. Job displacement. The automation of routine accounting tasks by AI could lead to job losses for some employees at ABC Accounting. The remaining staff might need to acquire new skills to work with the AI system effectively. 6. High costs. Implementing the AI system required a significant initial investment, which strained ABC Accounting's budget. Additionally, the ongoing maintenance and updates are adding to the firm's operational costs. 7. Ethical and legal concerns. If the AI system at ABC Accounting makes an error in financial reporting, it could be challenging to determine who is responsible for the mistake. Furthermore, the firm needs to ensure that their use of AI complies with financial regulations, which may require regular audits and updates. Conclusion. While AI brings many benefits to accounting systems, it also introduces several risks, including data security and privacy concerns, bias and discrimination, lack of transparency, dependence on quality data, job displacement, high costs, and ethical and legal issues. It is essential for businesses like ABC Accounting to carefully manage these risks by implementing robust security measures, ensuring data quality, maintaining transparency, providing employee training, and staying compliant with regulations. By doing so, they can leverage the advantages of AI while minimizing potential downsides, ultimately leading to more efficient and effective accounting practices. How to set up an accounting system. Setting up an accounting system is a critical step for any business to ensure accurate financial tracking, reporting, and decision-making. Here's a detailed guide on how to set up an accounting system, explained in simple steps to make it easy for beginners and non-accountants to understand. 1. Understand your business needs. Before setting up an accounting system, it's essential to understand your business needs. This involves identifying the type of business you have, the volume of transactions, and the specific financial information you need to track. Type of business. Determine if you are a sole proprietor, partnership, corporation, or any other type of business entity. This will influence the accounting requirements and tax obligations. Volume of transactions. Assess the number of transactions your business processes daily, weekly, and monthly. This helps in choosing an appropriate accounting system that can handle the volume efficiently. Financial information. Identify the key financial information you need to track, such as sales, expenses, inventory, payroll, and cash flow. 2. Choose the right accounting method. There are two main accounting methods, cash basis and accrual basis. Choose the one that best suits your business needs. Cash basis accounting. Revenues and expenses are recorded when cash is received or paid. This method is simpler and suitable for small businesses with straightforward transactions. Accrual basis accounting. Revenues and expenses are recorded when they are earned or incurred, regardless of when cash is received or paid. This method provides a more accurate picture of your financial position and is required for larger businesses and those with inventory. 3. Select accounting software. Choosing the right accounting software is crucial for efficient financial management. Consider the following factors when selecting software. Ease of use. Choose software that is user-friendly and easy to navigate, especially if you or your team have limited accounting knowledge. Features. Ensure the software has the features you need, such as invoicing, expense tracking, payroll, inventory management, and financial reporting. Scalability. Select software that can grow with your business. It should be able to handle an increasing volume of transactions and additional features as your business expands. Support and training. Choose software that offers good customer support and training resources to help you get started and troubleshoot any issues. 4. Set up your chart of accounts. The chart of accounts is a list of all the accounts used in your accounting system. It categorizes financial transactions and helps organize your financial data. Here's how to set it up. Create categories. Divide your chart of accounts into major categories such as assets, liabilities, equity, revenues, and expenses. Subcategories. Within each major category, create subcategories for specific accounts. For example, under assets, you might have cash, accounts receivable, inventory, and fixed assets. Numbering system. Assign a unique number to each account to make it easier to identify and reference them. For example, assets could be numbered 1,099.99, liabilities 2,029.99, and so on. 5. Record opening balances. When setting up an accounting system, you need to enter the opening balances for all your accounts. These balances represent the financial position of your business at the start of the accounting period. Gather information. Collect all necessary financial information, such as bank statements, outstanding invoices, and inventory records. Enter balances. Input the opening balances for each account in your accounting software. This includes cash in hand, bank balances, accounts receivable, accounts payable, and any other assets or liabilities. 6. Establish accounting policies and procedures. To ensure consistency and accuracy in your accounting system, establish clear policies and procedures for recording and managing financial transactions. Recording transactions. Define how and when transactions should be recorded. For example, you might decide to record sales transactions daily and expense transactions weekly. Reconciliation. Set a schedule for reconciling your accounts, such as monthly bank reconciliations. This helps ensure that your records match the actual financial activity. Documentation. Maintain proper documentation for all transactions, such as receipts, invoices, and contracts. This provides evidence for your financial records and is essential for audits and tax filings. 7. Implement internal controls. Internal controls are procedures and policies designed to protect your business from fraud and ensure the accuracy of financial data. Segregation of duties. Separate accounting responsibilities among different employees to reduce the risk of errors and fraud. For example, the person who processes payments should not be the same person who reconciles bank statements. Authorization and approval. Establish a system for authorizing and approving transactions. For instance, require managerial approval for expenses above a certain amount. Audits and reviews. Conduct regular internal audits and reviews to ensure compliance with accounting policies and identify any discrepancies. 8. Train your staff. Ensure that your staff is trained on how to use the accounting system and follow the established policies and procedures. Training programs. Provide training sessions or workshops to familiarize your staff with the accounting software and processes. User manuals and guides. Create user manuals and guides that outline the steps for recording transactions, generating reports, and performing other accounting tasks. Ongoing support. Offer ongoing support and resources to help your staff address any issues or questions they may have. 9. Monitor and review. Once your accounting system is set up, it's important to monitor and review its performance regularly to ensure it continues to meet your business needs. Regular check-ins. Schedule regular check-ins to review the accuracy and completeness of your financial records. Feedback and improvements. Seek feedback from your staff and make necessary improvements to the system and processes. Updates and upgrades. Keep your accounting software up to date with the latest features and security updates. Consider upgrading your system as your business grows and your needs evolve. Conclusion. Setting up an accounting system involves understanding your business needs, choosing the right accounting method and software, setting up your chart of accounts, recording opening balances, establishing policies and procedures, implementing internal controls, training your staff, and regularly monitoring and reviewing the system. By following these detailed steps, you can create an efficient and effective accounting system that helps you track your financial performance, make informed decisions, and ensure compliance with regulations. This comprehensive approach will set a strong foundation for your business's financial management and growth. Common accounting software options available. Choosing the right accounting software is crucial for managing your business's financial operations efficiently. There are many accounting software options available, each with its own features, advantages, and target users. Here is a detailed explanation of some of the most common accounting software options, explained in simple terms to make it easy for beginners and non-accountants to understand. 1. Overview. QuickBooks, developed by Intuit, is one of the most popular accounting software solutions, especially among small and medium-sized businesses. It offers a range of features to manage financial transactions and generate reports. Features: invoicing and billing, expense tracking, payroll processing, inventory management, financial reporting, tax preparation and filing, mobile app for on-the-go access. Pros: user-friendly interface, scalable with different plans for various business sizes, extensive integration options with other software, strong customer support and community resources. Cons: can be expensive, especially for advanced features, may have a learning curve for complete beginners. 2. Xero. Overview. Xero is a cloud-based accounting software designed for small businesses. It offers a wide range of features to simplify financial management and bookkeeping. Features: invoicing and quotes, bank reconciliation, expense management, payroll services, inventory tracking, financial reporting and dashboards, mobile app for iOS and Android. Pros: easy to use with a clean interface, strong focus on collaboration with multiple user access, comprehensive integration with other business tools, regular updates and new features. Cons: can be expensive for small businesses with limited budgets, limited customer support options compared to some competitors. 3. FreshBooks. Overview. FreshBooks is an intuitive cloud-based accounting software tailored for freelancers, self-employed professionals, and small businesses. It focuses on simplicity and ease of use. Features: invoicing and time tracking, expense tracking, project management, financial reporting, payments and billing, mobile app for managing finances on the go. Pros: very user-friendly and easy to set up, excellent customer support, strong mobile app functionality, ideal for service-based businesses and freelancers. Cons: limited inventory management features, fewer integrations compared to some other software. 4. Wave. Overview. Wave is a free accounting software option designed for small businesses and freelancers. It offers essential accounting features without any cost, making it ideal for startups and businesses on a tight budget. Features: invoicing and billing, expense tracking, bank reconciliation, financial reporting, receipt scanning, payroll services, paid feature, mobile app for invoicing and receipt scanning. Pros: free to use with no hidden fees, simple and easy to navigate, strong invoicing and expense tracking capabilities, ideal for very small businesses and freelancers. Cons: limited advanced features. Customer support is primarily through email and the Help Center. Payroll services are available only in select countries. 5. Sage Business Cloud Accounting. Overview. Sage Business Cloud Accounting, formerly known as Sage One, is a robust accounting software solution suitable for small to medium-sized businesses. It offers a range of features to manage finances and streamline operations. Features: invoicing and payments, expense tracking, bank reconciliation, financial reporting and dashboards, inventory management, project tracking, mobile app for managing finances. Pros, comprehensive set of features, strong reporting and analytics tools, good integration with other Sage products and third-party apps, scalable with options for growing businesses. Cons, can be complex for beginners, more expensive compared to some other options. 6. Zoho Books. Overview. Zoho Books is part of the Zoho suite of business applications. It is a cloud-based accounting software designed for small to medium-sized businesses, offering a wide range of features to manage financial operations. Features: invoicing and payments, expense tracking, bank reconciliation, inventory management, financial reporting, time tracking and project management, mobile app for on-the-go access. Pros: affordable pricing with various plans, strong integration with other Zoho apps and third-party tools. User-friendly interface, comprehensive features for small businesses. Cons: limited payroll features, customer support can be slow at times. 7. NetSuite ERP. Overview. NetSuite ERP by Oracle is a comprehensive enterprise resource planning (ERP) solution that includes robust accounting features. It is designed for medium to large businesses with complex financial needs. Features: general ledger and accounting, invoicing and billing, expense management, financial planning and reporting, inventory and order management, payroll and HR management, multi-currency and multi-language support. Pros: comprehensive and customizable features, scalable for large and growing businesses. Strong integration with other Oracle products and third-party apps. Advanced financial planning and reporting tools. Cons: expensive and may be overkill for small businesses. Complex implementation and setup process. Requires training and support for effective use. Conclusion: choosing the right accounting software depends on your business needs, size, budget, and specific requirements. Popular options like QuickBooks, Xero, FreshBooks, Wave, Sage Business Cloud Accounting, Zoho Books, and NetSuite ERP offer a range of features to help you manage your financial operations efficiently. Consider factors such as ease of use, features, scalability, support, and cost when selecting the best accounting software for your business. By understanding the pros and cons of each option, you can make an informed decision that aligns with your business goals and ensures effective financial management. Common challenges faced with accounting systems. Implementing and maintaining an accounting system can bring several challenges which businesses must address to ensure efficient financial management. Here's a detailed explanation of the common challenges faced with accounting systems, explained in simple terms for beginners and non-accountants to understand. 1. Data accuracy and integrity. Ensuring the accuracy and integrity of financial data is crucial for effective accounting. Inaccurate data can lead to incorrect financial statements, poor decision-making, and compliance issues. Data entry errors, duplicate records, and inconsistencies in data can all impact the accuracy of financial information. 2. Complexity and usability. Accounting systems can be complex and challenging to use, especially for individuals without a strong accounting background. The complexity of the system can lead to errors, inefficiencies, and frustration among users. A steep learning curve can also slow down the implementation process and reduce productivity. 3. Integration with other systems. Many businesses use multiple software applications for various functions, such as inventory management, customer relationship management, CRM, and payroll. Integrating the accounting system with these other systems can be challenging. Lack of integration can lead to data silos, where information is isolated in different systems, making it difficult to get a comprehensive view of the business's financial health. 4. Cost and budget constraints. Implementing an accounting system can be expensive, especially for small businesses with limited budgets. The cost includes not only the purchase or subscription price of the software, but also implementation, training, maintenance, and potential upgrades. Budget constraints can limit the ability of businesses to adopt advanced features or additional modules that may enhance the system's functionality. 5. Security and data protection. Protecting financial data from unauthorized access, breaches, and cyber attacks is a significant challenge. Accounting systems store sensitive information, and any compromise can lead to financial loss, reputational damage, and regulatory penalties. Ensuring robust security measures such as encryption, access controls, and regular security audits is essential. 6. Compliance and regulatory requirements. Businesses must comply with various accounting standards, tax regulations, and industry-specific rules. Keeping the accounting system updated with the latest regulatory changes can be challenging. Non-compliance can lead to legal issues, fines, and penalties. Ensuring the system adheres to all relevant regulations and standards requires continuous monitoring and updates. 7. Scalability and flexibility. As businesses grow, their accounting needs become more complex. Ensuring the accounting system can scale and adapt to changing business requirements is crucial. A system that is not scalable may become inefficient, slow, or unable to handle increased transaction volumes. Flexibility in the system is also important to accommodate new business processes, changes in organizational structure, and evolving financial reporting needs. 8. User training and support. Providing adequate training and support to users is essential for the effective use of the accounting system. Without proper training, users may struggle to utilize the system's features fully, leading to errors and inefficiencies. Ongoing support is also necessary to address issues, provide updates, and ensure users are aware of new functionalities. 9. Customization and configuration. Every business has unique accounting needs, and the ability to customize and configure the accounting system to meet these needs is important. However, customization can be challenging and time-consuming. Over-customization can also lead to a system that is difficult to maintain and upgrade. Striking the right balance between customization and standardization is crucial. 10. Data migration. Migrating data from an old system to a new accounting system can be complex and risky. Ensuring all data is accurately transferred without loss or corruption requires careful planning and execution. Data migration issues can lead to significant disruptions and inaccuracies in financial records. 11. System updates and maintenance. Keeping the accounting system updated with the latest features, security patches, and compliance requirements is necessary for smooth operation. However, updates and maintenance can cause downtime and disrupt business operations. Regular maintenance is essential to ensure the system remains efficient and secure, but it can be challenging to manage without affecting productivity. Conclusion. Implementing and maintaining an accounting system involves several challenges, including ensuring data accuracy, managing complexity, integrating with other systems, handling costs, protecting data, complying with regulations, ensuring scalability, providing user training and support, managing customization, migrating data, and performing system updates and maintenance. Addressing these challenges effectively is essential for achieving efficient financial management and leveraging the full potential of the accounting system. By understanding and preparing for these common challenges, businesses can implement robust strategies to mitigate risks and ensure the successful operation of their accounting systems. How to deal with problems and challenges while using an accounting system. Managing an accounting system effectively requires addressing various challenges and problems that can arise. Here's a detailed guide on how to deal with these issues, explained in simple terms to make it easy for beginners and non-accountants to understand. 1. Ensuring data accuracy and integrity. Problem. Inaccurate data can lead to incorrect financial statements and poor decision-making. Solution. Regular audits. Conduct regular audits and reconciliations to ensure the accuracy of your financial data. Double entry system. Use a double entry bookkeeping system where every transaction is recorded in two accounts, which helps in cross-verifying data. Automated tools. Use automated data entry tools and validation checks to minimize human errors. Training. Train staff on proper data entry procedures and the importance of data accuracy. 2. Managing complexity and usability. Problem: accounting systems can be complex and difficult to use for individuals without a strong accounting background. Solution: user-friendly software. Choose accounting software with an intuitive and user-friendly interface. Training programs. Provide comprehensive training programs for users to familiarize them with the system. User manuals. Develop clear and concise user manuals and guides. Ongoing support. Ensure that users have access to ongoing support and resources to help them navigate the system. 3. Integrating with other systems. Problem: integrating the accounting system with other business systems can be challenging. Solution: API integration. Choose accounting software that supports API integration, which allows different systems to communicate with each other. Professional assistance. Consider hiring IT professionals or consultants to assist with integration. Standardized data formats. Use standardized data formats to ensure compatibility between systems. Regular testing. Regularly test the integration to ensure data is accurately transferred and synchronized. 4. Managing costs and budget constraints. Problem: implementing an accounting system can be expensive. Solution: budget planning. Create a detailed budget plan that includes all costs related to the accounting system, such as software, implementation, training, and maintenance. Affordable options. Look for affordable or free accounting software options that still meet your business needs. Phased implementation. Implement the system in phases to spread out costs over time. Evaluate ROI. Regularly evaluate the return on investment, ROI, of the accounting system to ensure it provides value for the money spent. 5. Ensuring security and data protection. Problem: protecting financial data from unauthorized access and cyber attacks is crucial. Solution: strong passwords. Use strong, unique passwords for all user accounts and change them regularly. Access controls. Implement access controls to ensure only authorized personnel can access sensitive data. Encryption. Use encryption to protect data both in transit and at rest. Regular backups. Perform regular data backups to protect against data loss. Security audits. Conduct regular security audits to identify and address vulnerabilities. 6. Complying with regulatory requirements. Problem: keeping the accounting system updated with the latest regulatory changes can be challenging. Solution: stay informed. Keep up to date with the latest regulatory changes and requirements. Compliance software. Use accounting software that is regularly updated to comply with the latest regulations. Professional advice. Seek advice from accounting professionals or legal experts to ensure compliance. Internal policies. Develop and implement internal policies and procedures to ensure compliance with regulations. 7. Ensuring scalability and flexibility. Problem: as businesses grow, their accounting needs become more complex. Solution: scalable software. Choose accounting software that is scalable and can grow with your business. Modular approach. Use a modular approach where you can add or remove features as needed. Regular reviews. Regularly review your accounting system to ensure it meets your current and future needs. Flexible plans. Opt for software that offers flexible plans and pricing options. 8. Providing user training and support. Problem: without proper training, users may struggle to utilize the system fully. Solution: comprehensive training. Provide comprehensive training sessions for all users. Online resources. Develop online resources such as video tutorials, FAQs, and step-by-step guides. Help desk. Set up a help desk or support team to assist users with any issues they encounter. Regular updates. Keep users informed about any updates or changes to the system. 9. Managing customization and configuration. Problem: customizing the accounting system to meet unique business needs can be challenging. Solution: needs assessment. Conduct a thorough assessment of your business needs before customizing the system. Professional services. Consider hiring professional services for complex customizations. Standardization. Use standardized processes and configurations where possible to reduce complexity. Documentation. Document all customizations and configurations for future reference and maintenance. 10. Handling data migration. Problem. Migrating data from an old system to a new accounting system can be complex and risky. Solution. Planning. Plan the data migration process carefully, including a timeline and resource allocation. Data cleansing. Cleanse data before migration to remove duplicates and correct errors. Testing. Conduct thorough testing of the migration process to ensure data accuracy. Backup. Create a complete backup of all data before starting the migration process. Professional assistance. Consider hiring professionals or consultants with experience in data migration. 11. Performing system updates and maintenance. Problem. Keeping the accounting system updated and maintained can cause downtime and disrupt operations. Solution. Scheduled updates. Schedule updates and maintenance during non-business hours to minimize disruption. Automatic updates. Use accounting software that offers automatic updates to ensure you have the latest features and security patches. Regular maintenance. Perform regular system maintenance to keep the software running smoothly. Backup and recovery. Implement a backup and recovery plan to protect against data loss during updates. Conclusion. Dealing with problems and challenges in an accounting system involves a combination of planning, training, security measures, and regular maintenance. By ensuring data accuracy, managing complexity, integrating systems, controlling costs, protecting data, complying with regulations, scaling the system, providing training and support, handling customizations, managing data migration, and performing updates, businesses can effectively address these challenges. Implementing these strategies helps maintain a robust and efficient accounting system that supports accurate financial management and informed decision-making.